Hello, today is August 24th, 2019. We'll go over our calls. Look for the pattern with early low. We got that. Usually it's a rally day unless you gap down, move down smartly early, which is what happened. Typically, when this day turns out to be weak, more weakness is coming. Doesn't mean it has to be in a straight line. And unless we gap down smartly, I'm looking for this target 2869.50 to print on Monday. During the day, we had an ultimate buy signal that worked. Had a bunch of sell signals in the afternoon. They worked, but also an optionally higher target. It's my call. Now, we have all this DeMark stuff, which hasn't worked. But what has worked are these TDST lines from way back when, which are support levels. And I think we'll see the support hold in the 2700s. The DeMark stuff has worked on this weekly chart where you got your combo and sequential cells. We have an old TDST line from way back when. It's also in the middle 2700s. Support goes to a bar under the line, and that's where I expect this drop to end. Well, here's what we said. We said if Thursday's high held, we should see a big drop early, and that worked. And I thought a new down leg would start soon, which it did. Well, here's our long-term chart. We've drawn this line before. You'll see how we stopped right at it. Typically, when you have a straight line drop to a support level like this, you either gap under the support or the line wins. So if you're negative here, you really want to see us gap under these lows. A lot of people are calling this a megaphone. I don't agree with that. Megaphones are triangles. Triangles occur in penultimate waves. They don't occur in wave C's. They occur in either all of wave 4, which this clearly isn't, or they occur in wave B, which this clearly isn't. They don't occur in wave C. Somebody wants to disagree with me, that's perfectly fine. We had this hole in the wall gap and usually support under this wall's low holds. We came awfully close. That eroded support. And when you check it again, the support's gone. Well, we found wave blue B and purple A and purple B. We're waiting to see purple C, which is going to be the end of blue C and the end of brown 2, and then we can start the rally phase again. So let's look at the internal structure of wave purple C. Well, we had this as 1 and this is 2, and this could be wave 3 here, because this is a Fibonacci target of the diamond. Here's your stilt, here's your stilt, here's the diamond. You take the height, 38.2. There's your target. It's interesting, in spite of all these big drops here, here's the close. We had a big drop to, but not through all these prior lows. Drops which don't take out prior lows don't accomplish much. It still could happen later, but so far it didn't accomplish what it had to do. If you look at the internal structure of this last drop, here was your 1, here was your 2. Now if that's 1, 2, and 3, there is a fib relationship, and if that's 4, there's also a relationship to wave red 5. Now this whole thing started out impulsively, but this is clearly overlapping. If you're going to explain an impulse that goes into a overlap, you'd like it to be an ending diagonal triangle, If that's A, that's B, that's C, and that's, try it again, A, B, C, D, E, it would explain it. Looks a bit forced to me, but if it's right, we'll move up sharply and overtake this high at 2876.49. So it's one possible interpretation. Well, this was the squaring of time and price at Thursday's high. Take these 2 points, 335 points, 335 calendar days. Now remember those points. Here's squaring of time and price at Friday's low. You've got 231 points, and here 231 trading days. Sure would make a pretty picture if that worked again. If it does, we'll go straight up. We have the volume spike. That's what I like to see at potential lows. You can see how it's worked in the past. This one, well, it's not as impressive, but not bad. We did rally a few days. So how about Monday? Monday's patterns are regular, has an early high. The change in trend times I don't find helpful. Day-long drop on Friday almost always continues into Monday. If we gap up instead, if that happens smartly, something else is going on and we're going to keep going up. We have a higher MEJT target. It does print 95% of the time. Forget it if we don't see it. We have the wave count, the squaring of time and price, the volume, and MEJT, all suggesting we gap up sharply Monday and rally. And if it fails, it should be clear before the open. Now, that doesn't mean the whole drop's over. I still want to see 2740. If you want to catch a falling knife, I don't have enough yet. I've got the high volume. I want to see Standard & Poor's 500 under its lower band, particularly if it's flat. I don't have that. I want to see either volatility index or both of them over its upper band. I don't have that. I want to see the McClellan oscillator at its lower Bollinger Band. I don't have that. I want to see a compatible wave count. Well, I can make it work, but I'm not thrilled. So I don't have enough for this to be over, but I do have enough for a gap up Monday and a sharp rally. And if we don't gap up, the call's killed before the open as far as I'm concerned. And that's today's call.